You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
You know, this is an ideal story where if you like copper, but not in the short term, we're perfect because we don't have to shut anything down. You know, by the time we have Arctic ready to go, we expect copper prices to rebound and be above $3 again. You know, a lot of these other copper producers are struggling right now because they're dealing with all their operations. We don't have to deal with that right now, and yet we're a good call on medium to long-term copper.
This is Mining Stock Education, and I am your host, Bill Powers. Thank you for tuning in. Well, as markets are falling and vacillating, going up and down, and people are fixated on the price of the precious metals, we also want to be paying attention to Dr. Copper. Copper has fallen from $2.80 in mid-January to it's about $2.20 per pound, which is not many mines are profitable at that. I believe that's like about the 90th centile based on a recent article on copper that I read. So I reached out to Pat Donnelly. He is the Vice President of Corporate Communications and Development for Trilogy Metals, one of our sponsors. Pat, welcome back to the show. And could you provide us your take on what's going on in the copper market with mines shutting down around the world? Many are speculating, saying there's going to be an economic contraction. What will that do to the price of copper? Please share with us your thoughts here.
Yeah, thanks for having me on, Bill. Yeah, Doctor is, or copper, we call it Dr. Copper. Specifically because it's a leading indicator of global economic activity. And so when you see the global economy slow down, it's going to have a significant impact on copper. And specifically, 50% of copper demand is from China. So, and that's the epicenter of this whole virus. That being said, in the short term, copper's going to be under a lot of pressure. But I think it further supports the mid to long-term case where we're going to have a shortage of copper. And mines are getting deeper, grades are getting lower. And just to maintain production, a lot of these mines are going to have to put in billions of dollars of sustaining capital. For example, Codelco, which is the world's largest copper producer, and it's owned by the government of Chile in South America, they supply about 7 or 8% of the global supply of copper, and they need to put in about $4 billion a year just to maintain their production. And they're also raising a lot of debt. They're not getting any help from the government, and they're raising billions of dollars in debt, and that's going to catch up to them. And in the next 3-4 years, we're going to be in a pretty good squeeze. So the average copper mine nowadays, you need at least $3 to $4 copper to go into production, and average head grades are about 0.6% copper. So again, I think we're going to be moving into a very nice sweet spot for copper in the next 3 or 4 years.
Pat, with copper at $2.20 now in some mines in some of these countries like Peru, where they're on care and maintenance for a minimum of 15 days, but it looks like it could be longer. Do you think that when a lot of these copper mines do go on care and maintenance because of the COVID-19 crisis, and now that copper prices are so low, will some of them just continue to remain offline?
No, that's a really good question. I've seen this happen before. You got to remember, if you want to shut these mines, often the care and maintenance costs are pretty high. And if you want to shut them permanently, the closure costs are incredibly high. So and then you also got the social issues where if you're laying off people in some of these countries, that could cause problems. So I think they'll try to keep them open. Historically, usually what happens is when we go through a prolonged bear market in metals, mining companies have always went after the high grade ore to keep things open. I don't know how much high grade is left, but you may see some of these mines remain on care and maintenance. But if you got below $2 copper where they're really bleeding cash, I think then you would see some closures.
There are a lot of economists and commentators that I've listened to recently that are arguing for a deflationary situation and the economic contraction. If that occurs and copper stays depressed, not only this year, but let's say the next couple of years because of the economic situation, that essentially will just make the bull market out of that greater, right? It's almost like a coiling effect.
Yeah, absolutely. And once you shut these mines down, it takes a while to get them back up again. Some of them are, some of the biggest mines in the world are they're mining a couple 100,000 tons per day. So these are massive multi-billion-dollar operations, and maybe they don't get reopened again because of grade. So yeah, absolutely. I think what you're saying makes sense.
A lot of the major miners, though, they understand the value of copper and then also the need to plan in advance. So we're going through a crisis. It's big to us when it's up close, but you have a partner in South 32. So they understand that copper projects take a while to develop and come online. Where's Trilogy at right now with this crisis? Are you scaling back? And do you have any input that you can share with us on what South 32 is thinking?
Yeah, well, South 32, they're in very good financial shape. They have a net cash position of, I think, $250 million. They have a line of credit, I think, for over $1 billion. And they've always been very, very profitable. And they're in very strong financial shape. So I'm not too worried about them not weathering the storm. As you recall, in last February, we signed a joint venture agreement, or we completed the formation of a joint venture agreement with South 32, in which they put $145 million into the joint venture. It's a 50-50 joint venture between Trilogy and South 32. So that $145 million should last us at least 3 years, and therefore it's business as usual for us. And so out of the 145, 72.5 million of that is attributable to Trilogy Metals. Not to mention, we have almost 20 million in cash at the company level as well. So in total, we have about $90 million attributable to Trilogy. So it's business as usual for us. This year is a very, very busy year. We're working on a feasibility study for Arctic, and we're going to start permitting Arctic later this year. I think the only impact, apart from us all working from home right now with the COVID-19 situation, is that it may impact our summer field season. That usually does not start till June. So if this thing does subside, then we may be able to stay on track for the summer field season. We're currently looking at a number of scenarios for our summer program if this situation continues. But that being said, I don't think it'll impact our overall timeline. We're busy with the permitting of Arctic. We're busy with, like I said, the feasibility study, and the Bureau of Land Management is still making incredible progress for the permitting of the Ambler Road to the Dalton Highway.
And you had your final environmental impact statement issued just within the last week.
That's correct. The Bureau of Land Management issued the final environmental impact statement for the Ambler Road. That came out last Friday. And that's a critical document. They've been working on that document for like 4 or 5 years now. And so we're almost at the touchdown line with the permitting of the road. As you recall, these assets, the issue's never been about whether they're economic or not. The issue's always been infrastructure. And currently the BLM is permitting a 211-mile road to our project from the Dalton Highway in Alaska. And so now the next steps, now that the environmental impact statement is completed, is for the Bureau of Land Management to issue their record of decision, and that'll be jointly issued with the 404 wetlands permit, which is issued by the Army Corps of Engineers. We expect these two documents to be filed in the next 30 to 60 days. So let's say before the end of the second quarter. So those are two huge catalysts for this company.
Anything you can share with us publicly on the CEO search?
Yeah, we're almost there. We had 12 candidates, and we've whittled it down to 2 people who are very, very solid candidates. And so hopefully in the next couple of weeks, we'll have some news on that. So we had some really talented people approach the company, given that we have high quality assets in a great jurisdiction. And as I mentioned before, we're well cashed up.
The Alaskan government is very favorably disposed towards mining. Any restrictions that they mandated from the state level because of the COVID-19 crisis that would impact the mining industry currently?
I haven't seen any. I'm not aware of any projects that operations have shut down yet. They have reduced people coming into the state from outside the state, and like everywhere else, they've really clamped down on social gatherings. But so far, I'm not aware of any mines being shut down. But obviously, like I said before, if this situation continues, it will impact our summer program.
Pat, when I spoke with you both at the Sprott conference last year and then also recently at PDAC, both times you were told me you wanted to swallow up the Trilogy stock because you
Yes.
felt it was undervalued. Can you talk about the valuation? Some investors may say, well, the mine development is far out, but what would be the appeal to investors today?
Well, yeah, we have been swallowing up shares. Actually, Jim Gowan's our CEO. He's been our interim CEO. He's been buying stock in the market. We had a couple of directors been buying stock, and I've been accumulating stock, and I'm still trying to get some more. And I'm going to keep buying. Every penny I have, I'm going to put into it. That being said, yeah, I mean, the short term things are tough, but I think eventually, South 32, they're putting this money into Trilogy because I think they believe in the assets, and they're going to use this money to de-risk our assets as much as possible. And I think inevitably they will pull the trigger and take out the company altogether. And one question I often get is, given our share prices pull back, do we feel vulnerable? Fortunately, I'd say about 60 to 70% of our shareholders are friendly, and they have a very high target price for what they want, and they see the value in these assets. So in particular, our top 3 shareholders have been in the story since the beginning, Paulson, Baupost, and Electrum, and they collectively own 40% of our stock. They're not going to give this thing away. And like I said, there's no other assets in the world that have the quality and the grade what we do. And matter of fact, there's very few good copper assets out there. So I think eventually we will be taken out. And the last few acquisitions of quality copper assets, I've always gone for a good premium, as a premium over their share price and a premium over their NAV. So I don't expect, regardless of the market situation, we're still running out of copper, and specifically we're running out of high grade copper.
Yeah, you're one of the best plays on high grade copper. And as you mentioned, for 3 years, investors don't need to worry about any dilution.
Yeah, we don't have, there's no reason for us to raise money. At the corporate level, there's only about a half a dozen of us in the office, and our technical people have moved on over to the joint venture. And we have more than enough money in the joint venture to get Arctic all the way up to a construction decision. And not only that, but also do work on the rest of the belt. Remember, it's a 70-mile belt, and has dozens of prospects and historical resources. So, we also have Bornite, which we will do a little bit of work at this year. So, as I said before, we own not just a mine, or potential mine, but also an entire mining district that could be in production for decades.
Yeah, and I'll also point out that I don't have your chart in front of me, but I believe 9 months ago your share price was over double what it is today. So that's just how you're triple. Okay, triple. And so the only pushback of expected catalyst for this year really would be that the exploration season. Then is that what investors should expect?
It could be impacted by what's going on in Alaska, and we're looking at a number of scenarios how to address that. But that being said, this is an ideal story where if you like copper but not in the short term, we're perfect because we don't have to shut anything down. By the time we have Arctic ready to go, I'd expect copper prices to rebound and be above $3 again. So you're seeing, a lot of these other copper producers are struggling right now because they're dealing with all their operations. We don't have to deal with that right now, and yet we're a good call on medium to long-term copper.
Yes, and the website is trilogymetals.com, and you can find it on the big boards in New York or Toronto under the ticker TMQ. Pat, I appreciate you coming on the show. Any final thoughts as we conclude here?
Like I said, I think the main thing is, we're in a great jurisdiction, great relationship with the native corporation NANA, great relationship with South 32. The other thing I should mention is, the reason we have great support from Alaska is because most of Alaska's tax revenues come from oil and gas, and we've seen oil getting hammered. And not only that, the tourism industry is a big contributor to the economy, and fishing, and those are the other two sectors in Alaska that are getting hammered. And that's motivated the government to diversify away the economy, and that's why we have this tremendous support for the road and tremendous support for our assets. So we're in a very, very strong situation, and again, as I mentioned before, compelling value, and we don't need to raise money.
Pat, thanks for coming on Mining Stock Education today. I appreciate it.
Anytime, Bill. Thanks for having us on.